All right, everybody, welcome back to the channel. Today we got our first interview. Well, actually the second one, but the first one online. Today we are going to be having a lot of great conversations with my guy Will here. We're going to be talking about crypto, macro, real estate, what's hot in the world right now, and a lot more, guys. But first, let me introduce my first guest, Will. Will, who are you? What do you do? Why should we listen to you? All that kind of stuff.
Well, I mean, first off, you shouldn't listen to anybody online.
That's facts. That's very true. Don't listen to any influencer. But
None, zero. I tend to day-to-day trade markets, both side on the stock side and on the crypto side. I've been an advocate, I would say participant since roughly in crypto around 17, and then in stocks, I've been doing that for like 10 plus years as far as trading and actively investing. A lot of people just want to invest. I want to make money on my money so I can make more money. So that's why I tend to trade. But, you got to do it in an intelligent way. You can't be trading a whole portfolio, obviously, but we don't have to get into all that.
Yeah, a lot of big stuff. What are you doing with the Because Bitcoin? Because I actually knew a guy who like maybe started Because Bitcoin, but I remember it's, a recently formed group. So what's going on over there?
So a lot of the stuff on the Because Bitcoin side is more around data, news, trading. We actively pay attention to markets, kind of like look at directionals, and we discuss. I mean, the show is pretty open, to be honest with you. Like, we do a show too, but we tend to be more of like a panel that doesn't sit in a tunnel vision type scenario. There's a lot of times we don't all agree on direction or price or anything like that, but we try to pay attention to price over everything, because I think a lot of people get caught up in everything around price versus the actual price.
Yeah, there's a lot of stuff going on there Because Bitcoin. Make sure to go check that out. But now we're going to dive into our topic. So the first topic we're going to be talking about, could the thing that's going on in the Middle East potentially be a black swan event for the markets, for crypto, and all that stuff? Will, I want to hear your opinion on all this first.
I think, like, when you look at the stuff, I mean, first off, I just want to say what's going on over there is horrible. I do want to be very advocate about that, and it's not a political side. I don't think that people should, actively go after other people. But outside of, and it doesn't matter what side you're on with that.
Mm-hmm.
I think like the majority of people look at it like, oh, this is going to happen or that's going to happen. The only way I see a black swan with this whole scenario, I will throw it out there. I'll entertain the thought. Is if the U.S. gets involved. The problem is with that is I just feel like there's too much red tape for the U.S. to get involved, right? We've played on both sides of that, and entertained and helped both sides of what is going on. And because we've done that, it's like, how do you really pick a side, right? And I feel like a lot of people don't look at that. And I'm not saying like us as individuals, but I'm saying the U.S. like as a country, right? Like as far as like our army and all that stuff like that. I can't really see a scenario where we even actively get involved and do anything about it. I mean, I can give you an example, right, of another country that needs active intervention, but we don't intervene, and that's I'll throw it out there. It's Africa. That's another one I pay attention to too. I mean, there's consistent, killings and other things that go on over there that we just let it happen. Like we don't intervene in these countries. We let them do the things they do to each other and don't do anything about it.
Yeah. And I think it's kind of interesting because a lot of people on Twitter, on X, these doomers are all hoping for that big, looking for that 2020, COVID wick down. And they're, people were screaming on Twitter today, oh, this could be, the new 2020. This is the catalyst that really brings things down. I don't know. And I completely agree with you. I think this could be something that, potentially could end up being something huge, or it could be just another thing that, makes its way through the news cycle and people, kind of stop worrying about it in just, maybe a couple weeks time. So I'm completely on that with you. And now let's talk a little bit about Bitcoin. There's a lot of stuff going on around Bitcoin right now with the spot Bitcoin ETF. BlackRock applied for one. Fidelity applied for one. We got the halving coming up in April. There's a lot of big stuff. What is your take on Bitcoin? What does Bitcoin mean to you? What do you think about it? I just kind of want to hear your first overall opinion on Bitcoin.
I have a lot to say about Bitcoin, man. A lot. And it's not negative like most people are, right? I feel like so many people are just dooming right now. They're just dooming and dooming and dooming and dooming. It's like you gotta know when you're on the right side and you're on the wrong side of the trade, right? Mm-hmm. And if everybody's dooming, I'm on the right side if I'm bullish, right? If everybody's bullish, I'm on the right side if I'm dooming. Because, I mean, the reality is a lot of the time that everybody's bullish, it's at the top. And I don't mean the top of the current move. I mean the top of the cycle, right? Mm-hmm. Because I don't look at a top when you're at a bottom, right? And somebody, that's a very controversial statement for a lot of people. Like, well, you don't know it's still. I don't even go deep. Yeah, it could go deeper. But how far are we already down?
Yeah.
I think people don't look at asset depreciation. They'd rather look at, we can go further. We can go further. Like, do you want zero? Like, what? At what point are you happy to buy? And man, it's such a loaded answer for me. I usually say such a loaded question, but I feel like it's a loaded answer. And it's more in the factor that, I think, and it's very odd how it always plays out. Your 4-year cycles stay intact. Mm-hmm. And I'll give you a reasoning beyond just the happening, beyond just the, hey, I hope, and beyond, so on, because I don't hope. I never invest on hope. That's not my MO. Traders don't invest on hope. They don't. They invest on price. But I would say if you look at the happening and you look at presidential elections and you look at end of year, so on and so forth, all these things line up. And that's what actually creates this momentum play that a lot of people think, oh, these people think that some kind of 4-year cycle changes it. No, you have to look at how it lines up. There's a lot of, we'll say, big events that happen around the happening, and it's consistent. So you may think that it's not, but it is, right? Your lines up with the happening, and presidential elections in any asset class across the board, right? They all see moves in the presidential. It doesn't matter if it's a bad presidential election or a good presidential election. The only differentiating point of a presidential election is if the market's unsure, they might dump into the presidential election before the pump, right? But the pump always comes because people get optimistic when there's a new president. They get optimistic when there's new congressmen. So, well, I wouldn't say congressman, but president for sure, right? Because they look towards what? They look towards policy change. That's what a lot of these bigger players look at. That's why they invest into these presidential elections. You can go back through the data. Yeah. Like all the data's there with presidential elections. They tend to be pump scenarios, right? And we're moving into one of those.
Yeah, I definitely think you hit the nail on the head with that one. Literally, if you just look at every single presidential election, right after it, there's always a pump. And if you look historically with the Bitcoin halving, I mean, we can get into it about the effect of the Bitcoin halving, but historically, the Bitcoin halving has had an impact on the price. I do think over time, the power of that halving is going to be completely just diluting every single time it happens. But to touch on what you were saying about the doomers, I think, once again, a lot of people are hoping for that, that big candle down, that big wick down. But I personally believe unless something catastrophic happens, unless, China invades Taiwan or something crazy happens, I think the whole FTX, I think November, October, that was the bottom. A
lot of people aren't willing to accept that. And you can see it. You can see it across the board. Like, people are not willing to accept that. I mean, if you look at price depreciation on altcoins, and some may be like, well, those are S coins. Look, they're 98% down. They're 98% down. I don't know how you can look at that and be like, oh, it's going to go another 100%. Okay, that's 1 more percent from the high.
Yeah.
What do you want?
I know. Like, we already saw the second biggest exchange in the world completely collapse. We saw all the big crypto hedge funds collapse. It's like, all the liquidity's gone. I mean, it's just about like 500 of us on Twitter typing to each other with a bunch of cartoon characters. Like, really, that's basically it at this point. And I mean, you see it a lot too. But I want to touch on now with BlackRock, potentially getting that spot Bitcoin ETF, Fidelity too. But what do you think about BlackRock and Bitcoin and that relationship? How could that impact Bitcoin, the price of Bitcoin, all that?
Well, I want to touch on a couple points when it comes to BlackRock specifically, because a lot of people are looking at this like, oh, they're going to come in and wash out the whole market. I'm going to give you just a number, right? And that number is 1 trillion. 1 trillion is what the total crypto market cap is.
Mm-hmm.
1 trillion. BlackRock owns way more than that in their portfolio. Why do they need to come in and wash out anybody? They can basically buy you out of your position and not care. Mm-hmm. That's basically, and a lot of people don't entertain that part, right? They think they're going to come in and wash trade down the market. No, they have no need to. They can come in and just pump price to a point to where you're like, oh, it's going to dump again, and then you're going to sell, and then it's going to keep going. Mm-hmm. And this is how markets take advantage of people, right? They take it, especially Bitcoin and crypto. I will say this is the most predatory market out there, and I'll say I want to be clear on that, because I know some people are going to be like, oh, well then why would I? It's predatory to the people that come in and buy for 1 or 2x, and then they leave and they come back at the top every single time, and their exit liquidity. They're not willing to withstand the current drawdown. They're not. Yeah. I don't think the lows are predatory at all. I think the highs are predatory. That's where your predatory comes in. Your top of markets is what really structures people into a position of where they're leveraging at extreme amounts, like, basically refinancing their house, buying Bitcoin, going in and selling their cars, buying Bitcoin, thinking that it's going to continue, but they're actually getting in at the top.
Yeah, and I actually saw that, touching on that point about the top being very predatory. I mean, I had friends who took out loans on BlockFi for Bitcoin during, 50, 60K region. They got screwed over on that. You have Michael Saylor telling you to just, sell your house for all of Bitcoin. You have all these influencers. You had, Suzu taking loans for yachts. It was absolutely nuts. And people, when things get euphoric, everyone's just buying in. And that's when, how you touched on, that's when people get absolutely screwed over. That's really when the bad stuff happens. When the drawdowns happen, it's like, by the time when November 22 happened, after the whole Luna thing, it's like most of the people who were just, tourists got wiped out by Luna. They left after that. So when FTX happened, that was, basically us just getting hit at that point. I mean, the people who are really have skin in the game and are really here for the long haul.
I would arguably say FTX was that final washout. Mm-hmm. It was that final capitulation event that we needed, and a lot of people aren't willing to accept it because they're like, oh, well, price only dropped a little bit from FTX. Okay, but look how far it dropped from the highs. I remember above 30 where everybody's telling me I'm stupid that it wasn't going to go below 30. And I'm like, okay, we'll see. Mm-hmm. And I had a price target roughly around 14 to 10. We hit 15. I was pretty close, but you can't ever be spot on. You can't ever be spot on. And the only reason I even entertained 14 was because if you were looking at the weekly, there was a price or an area of liquidity within that zone, right? And we pretty much bounced right off it. A lot of people are like, oh, we're going to bounce out the high of the previous cycle. We dove right into that. Like, you have to understand when you're in a value range with Bitcoin and with crypto, and that value range, anytime you're below previous high, you're in that value range. And I say value range because everybody wants to look for a value bottom. Mm-hmm. I can tell you from a trader's aspect, and you can look this up statistically, any trader out there, your best traders might catch one bottom and one top in their life. And a lot of people don't even understand that because you can't call tops and bottoms. You can't find tops and bottoms. When can you find them? When they're hindsight. When are they hindsight? When they're already in the middle of the next market.
Yeah. Yeah, I completely agree with you on that one. Nobody actually knows what... Everyone gives price points and all these things and all that fun stuff, but nobody actually knows, where it's all going. But yeah, for my next question is, what is your Bitcoin outlook for the next, 2 years? We're going to do a little speculating here. Where do you think the price of Bitcoin could be in 2025, 2024? What are you looking at price-wise next 2 years? What do you think is going to happen?
I mean, I have a couple theses. One will be minor capitulation. One will be price has to go. Miners have to hold. They can no longer sell. And if that happens, that relieves a lot of the selling pressure on the market and allows market to go up. And I'll throw you out the miner one. So the miners, the way I look at those specifically is miners, they either have to go out of business or they have to hold their Bitcoin after the halving. Actually, probably going into the halving too, or they might dump the last bit going into the halving. We'll see, but it's going to be one or the other. They're either going to dump into the halving or they're going to hold into the halving. And now you may be like, why would they do that? Because their cost to mine versus overhead costs. That's electricity, that's facility, that's, if they have loans, that's loans. All these miners have these things. And so the cost of mining right now on average for most miners is sitting below the 50% threshold. What does the halvening do? The halvening cuts the amount of Bitcoin that could be mined in half.
Yep.
So if you're below the 50% threshold, you need price to go up before you can be profitable to sell. Otherwise, you're selling at losses, right? And nobody wants to sell at losses. Well, I mean, retail does. But any smart investor does not want to sell at losses, right? And any smart business does not want to sell things at losses. So what does that force these miners to do? It's going to force them to have to hold until Bitcoin can get up to the profitability portion of price ranges, which is going to be well above what? Well, if their average cost right now is below the 50% threshold, and that was at, we'll say, 25K Bitcoin, then you have to be sitting at $35,000 at the halvening at minimum for them to be just cutting the tape on being profitable, right? And arguably, I would say you have to be closer to 45,000. So I think if you start getting back into those ranges, and again, I'm gonna iterate, you get above 30, you're in the top end range of the market. Again, the previous market. And you start getting into the top end range of the previous market, you start entertaining people's who are looking to invest in crypto. And I don't mean retail, because retail is going to buy the top again. I mean big investors, right? They're like, okay, we have moved out of the consolidation range. We are moving into the high-end accumulation range. And now they're going to start pushing in really big, right? And that's really what I think brings the halvening to fruition, is the forcefulness it puts on miners to hold, in which case it creates passive flows into crypto that are basically up only, right? Because if you don't have miners selling, who's going to sell, right? It's only going to be capitulation sells. That's it from there. Because people right now, I can tell you in these ranges, people are buying to hold.
Yep.
We're buying to hold for the next market. Nobody's buying on here to day trade Bitcoin unless, I mean, maybe, okay. Let me be clear about that, because I know some people are like, yeah, they are. Okay, yes, you do have traders doing it. But retail, big investors, so on and so forth, they are not buying Bitcoin to sell it again at 30. They're just not. They're buying for the intention of the next market. And if things drop lower, they drop lower. I remember in 2021, look, when I was telling people, I was like, look, we're probably going to go back down to like 20, probably even 14. And everybody was like, I would sell everything to buy at 20 and 14.
Yeah.
Everything.
I remember that.
And half those people aren't even here anymore. Half of those people aren't even here. I would arguably say most of them are not here. So when you look at it like that, it's like all these people basically came in and pretended. That's all they did. They wanted to jump on the ride. They saw the shiny new toy, and they threw everything they had on it, and they lost it all. Now, does that mean that crypto is not an investable asset? No, it doesn't mean that at all. I think crypto is an amazing asset. I think everything in the crypto ecosystem, blockchain, everything, I think the technology is flawless. Here, I'll give you an example of a real world blockchain. Amazon uses blockchain, not blockchain in the way that we see it, their own blockchain, but they use blockchain technology, right? And they do that through AWS. You can go look it up. AWS is a blockchain. And that is what every website, we won't say everyone, just about every website, almost all your top 500 Forbes companies are utilizing AWS to host their sites. That's why when people say Amazon's going to go under, it's like you have no clue fundamentally how things work. I was like, there's too many companies invested in AWS. That's what floats their whole company. Amazon could be completely unprofitable. AWS will float the whole deal.
Yeah. Yeah, and also you touched a little bit on the Bitcoin miners. I want to get a little bit into that. For full disclosure, I am big into the Bitcoin miners. I like them a lot. I like Riot. I like Hut. I thought Mara recently made a very interesting move to, cover the debt and all that. But what do you think about the Bitcoin miners in general? What do you think about Mara's recent move? I don't know if you saw that. It's very controversial. A lot of people were hating on it. What are your thoughts on that whole scene?
I mean, if you could give me the miner stuff first, then I can get into my opinion And not minor stuff, but the Mara stuff. Sorry, my apologies. What is it with the Mara thing? Sorry,
Yeah,
I haven't been to that.
Yeah, so Mara recently just made a move to cover their debt. I think it had something to do with they basically made a move to dilute their common shareholders in order to basically give themselves a bonus check. I'll be honest, I didn't look too deep into it really. I was kind of hoping you would look a little deeper, and I can pull it up right now.
No, I mean,
I don't got it at the top of my head. It happened a couple weeks ago, but I wasn't. Hold up, Mara. You can just go to their Twitter account.
So they're diluting, essentially.
Yeah, to cover debt.
Okay, so that's what I was going to get into. All right, so that's a good point, and that's why I wanted you to kind of talk about that portion specifically. I think if you look at Mara, right, and you're looking at what they have going on, what they're doing. This is exactly what I said would happen, and I said this in some spaces like 2 or 3 weeks ago. Mara, you're probably going to see. I'm just going to sing it out there. I don't care. Like, I'm going to get some shade for this, but it is what it is. HUD 8. I think like the only profitable miner I can see out there is Wolf, right? Mm-hmm. Every other miner essentially is underwater, and so they have to make money somehow. They only have 2 ways of generating income. Do you know what those ways of generating income are?
Well, I think they're just.
Fun,
I mean, yeah, they're just selling Bitcoin, pretty much.
Okay,
but some of them aren't doing it. And then the other way, I guess. Let me think about it real quick. Selling Bitcoin, and I guess they're selling. Are they working with the state somehow with their electricity or somehow?
Nope.
Can you educate me?
There's 2 sides. So they're playing 2 sides of the coin. One side is they can sell Bitcoin until it's unprofitable. The other side is they have to start diluting and selling their stock.
Yeah, I forgot about
Those
that.
are their only 2 ways to generate income. So one side's going to suffer and one side's not. So arguably, here's the kicker. I'm going to give you the kicker. These companies will probably get wrecked going into the halving, because they're going to start selling stock to offset their Bitcoin losses. You see what I'm saying?
Yeah.
So, like, a lot of people are buying in now for moving forward. Unless these miners are above that 50% threshold, I think you're going to see a black swan event where miners on the stock side, not on the Bitcoin side. And arguably, I would say if you look at things like some companies, like I'll use HUD 8 for instance, right? HUD 8's I'm going to get so much flack for this.
Fine. I own HUD 8. You can go.
HUD 8 is the most unprofitable miner out there.
Mm-hmm.
From what I can see. I think right now they're making 3,000 per Bitcoin. Or they were making 3,000. They're probably making closer to like 5 or 7 if the numbers still stand from what I had before, right? So they're making 5 to 7, whereas every company when they were making 3 was making closer to 10 or 8K per Bitcoin. So that tells you how much further behind they are than every other miner on profitability, right? Mm-hmm. Now, do I know why their offset is so bad? I don't. Now, I can give you some factors. I can give you some numbers, right? Mm-hmm. And I can give you some thoughts on why I think they're not. So we'll go into numbers and thoughts. I would say maybe they pay higher electricity, but I don't know that definitively, which means they're paid a higher, we'll say, penny percentage per kilowatt than all these other miners. Maybe these other miners are sustainable, whereas HUD 8 is not, which means they probably have some kind of offset, whether that be solar, wind, water, whatever it may be. Maybe HUD 8 also has loans, and these other companies may not have loans or as big of loans. Now, I'm entertaining so the audience itself specifically can understand, okay, why are they so far behind the other miners on their average profit? And these are things like, if you were to look into stock companies, these are things you look for, right? And you look for cash on hand. Do these companies have cash on hand? Arguably, I'd say HUD 8's starting to run out of that, and Mara's starting to run out of that. Yeah. I think that's why Mara's doing what it's doing. It knows it can see the writing on the wall. It needs to survive going into the halving, because if these miners make it out the other end, they're going to make it through the next cycles, right? But if they don't make it out the other end, they're not going to make it. they're going to get crushed, and they're gonna basically have to Chapter 11.
Yeah. So my question to that would be, what would be in the hypothetical doomsday scenario for miners? What would happen to the the mining industry and mining in general if all these companies were to go bankrupt and all that?
I don't think they all do. I think some miners have positioned themselves to be able to acquire these miners that could go under. And I'm gonna throw you guys a really good one. So I think some of these miners have positioned themselves to be to look good to be bought. I don't think they have any intention to make it past the halving. And a lot of people don't understand that too. I'm not going to throw out which one I think that is.
No, throw it out.
All right, look, and if they survive, I'm gonna not be able to live this one down. At least not in the public size. I can admire it. I think Hut 8 has been positioning themselves to be acquired, and not necessarily be a profitable company moving into the next happening. And now people have to understand, and always look at your CEOs, the people running the show, because if they have a history of creating businesses and then later on selling them, then in those scenarios, you're more than likely going to be in a company that's, been created and probably sold. And those tend to, when they sell, not be as profitable to the stockholders as they do to the company, right? The company will make out on the sell, whereas the stockholders will probably be underwater on the buys that they bought anywhere near the highs. The acquisition will be much lower than where your entry is. And we saw that specifically with Twitter, right? When Elon came in and took over Twitter, he did get priced and he paid a premium, but he was still significantly below the highs of where everybody else had gotten trapped in liquidity. So if you bought way higher, you basically had to sell at a loss. Whereas a lot of people were like, oh, yeah, if you buy now, you can buy up to the premium and you can make money on it. Yeah, you could. That's an arbitrage play. So if somebody's offering your company $48 per stock and your company's valued at like $40 per stock and you have that gap of $8, you can buy into that $8 and get that premium all the way up to that dollar amount. That's why company acquisitions are great for people that are looking to look for those and invest in those as a arbitrage play. But they're not great for people that have been long-term investors who have believed in the company and thought the company would continue forward. So again, usually the new company will acquire and give you some portion of their stock as like an equivalent of the company acquisition if you want to stay in it. But usually that still doesn't end too well for you because those bigger companies, they don't have as much growth, right? So your potential to get back to your entry it could take you years. So those are tough ones, man. And I like to be very transparent about that because I think not a lot of people think about these things on a deeper level and like how they take advantage of your average investor. Because you're a lot of people that invest in like things like Hut 8, for instance, you're looking at the books, you're like, this is the lowest cap miner out there. It has the highest profitability. I'm right now telling you the risk of that highest profitability, right? And these are the risk factors that people are not willing to acknowledge.
Yeah, I'm glad you touched on a lot of those points. Really good stuff. I also have some Hut 8 right now, kind of get that little moon bag going on. So, but I guess let's talk about something else now. Let's talk about the stock market. So what do you think about the stock market in crypto? And when crypto, because eventually the markets will go up, do you think crypto and the stock market, people always talk about the correlation between the two and all that. Do you think when crypto goes up, the stock market's going to go up? What do you think about the stock market and really what's going on and all that stuff?
I mean, I'll be real. When it comes to stocks, like, arguably, I would say they're actually bullish, right? But I would say like if you get below a certain point, they start to go bearish. But I'm not playing stocks like I'm playing crypto. I'm playing crypto into the happening. Look, people can believe it or not believe it, whatever. Like I said, I've given you real data on why it works. But I can just come in here at the end of the day and just say the happening. This is what it is. Other people will be like, that's not a numerical, that's not a data point. I gave you data points. I gave you numericals. I told you why, elections, so on and so forth. So I'm going to continue to play happenings, which means like right now we're in value. And when we're in value, I continue to accumulate. Not only crypto, like I'm even dabbling in some pretty high risk plays. I've been playing with like flash loans and lots of other things too in crypto. I think there's a lot of entertaining scenarios that a lot of people are just not looking at because they're so focused on price go up. The NFT crowd is one of those too. They've been so hyper focused on price go up rather than looking at accumulation ranges, rather than looking at ways to arbitrage their PFPs, so on and so forth. There's a lot of ways to do that in this space. The money flow side of this space is insane. You can farm. You can look. I'll give you an example, right? I don't know. Is it okay to name cryptos on here?
Or yeah, I don't name cryptos. Go ahead.
Okay. So like, I'll give you an example, and that's, I'm not at all telling people to go buy this product, but yeah. I just want to be very clear about that. But base swap, and I know a lot of people are like, oh yeah, well, I'm going to go buy it right now. No. You got to know what you're getting into before you attempt it. It's a very high risk play, low liquidity. But if you look at the average on their returns right now, like 418 to 600-700%. If you were to go and you were to arbitrage play these with liquidity, basically add the ETH and base swap pair and so on and so forth. So if you're providing liquidity, they are giving extreme numbers on return. Now, could this project ultimately go to zero? Sure, 100%. It has very, very, very low liquidity. Not only does it have very low liquidity, it also, I don't know, it's very risky in a lot of ways, right? You're playing on a chain that, potentially will catch adoption or will not. And then on top of that, you're playing a very low liquidity token. And these are percentages we haven't seen since 2021, right? And I'm just throwing that out there, not necessarily as alpha, but to just give examples of like, there is liquidity here in the space. There's places to take advantage of liquidity if you know how. And everybody's always searching for how. Right. And they're wanting to chase the guru. They're wanting to chase the guy who's going to sell you a TA course. They're wanting to just go and learn blockchain, learn how to code I'm not telling you to learn how to code a token to create one. I'm telling you to learn how to code one so you can understand how to read the contract, and how you can get involved with these spaces and how you can arbitrage these areas of liquidity. The most liquidity flows that I've seen have into crypto, and you can look this up statistically, is on the payment side. It's on the money side. It's not on these high beta plays like, I'm not even going to name it an S coin, but these basically meme coins that are out there. A lot of people, they're going in for like 60% on a meme coin. Why? You could have bought half of these altcoins that are not meme coins, that are actual projects, gaming tokens, gaming platforms, IDO platforms, ICO, IDO, same thing. Mm-hmm. But you could have bought half of these at the lows and you'd be up like 10x right now. Like, I don't even, I'll throw out another name. And again, it's not to buy, guys. Like, I'm just going to give you an example so you can look at the chart. Look at Nakamoto Games. The chart has just been in this massive bull run the entire time everybody's been funding crypto. It's doing very well. And arguably it'll probably continue to do well. Right? Gala is getting crushed through the floor. I got to understandably why. There's not a lot of liquidity that they're having to sell to be able to keep up overhead. That's the other thing too with altcoins. Well, we can touch on that in a minute unless you want to touch on it right now. But
let's touch on it. Let's go. Let's do it. Okay.
So altcoins, the Bitcoin, and this is what a lot of people don't consider, because they're constantly looking at Bitcoin specifically, and they're like, oh, yeah, why would Bitcoin outpace any altcoins? The reason it does is because who is Bitcoin paid? What's the CEO? Who's the employees, right? None of that is happening because Bitcoin is not a company or a project that is ran by a team. It is a blockchain crypto. That's it, right? And it just operates how it operates. There's nobody to pay other than miners for transactions, but that's simply you're paying the rails to move the money. Whereas like if you look at any altcoin out there, they all have teams, they all have CEOs, they all have draws, they all have to make money to be able to keep up their overhead, right? So if they need to keep up their overhead, what does that mean? That means selling pressure on the team side, right? Not just the retail side. And you got unlocks, right? Unlocks are another thing that you got to pay attention to. When you're in a bear market, unlocks mean a lot more. When you're in a bull market, unlocks mean a lot less because those will usually just get ate up and ate up and ate up. It's actually ridiculous. So these things are what can drive altcoins lower while Bitcoin continues to go higher. While people are continuing to pay attention to high beta, they're not actually paying attention to the actual beta. and that's Bitcoin for now, right?
Yeah.
And I know a lot of people look at it and they're like, well, I could buy an altcoin and I just got to do 100x. Why would I buy Bitcoin? Because if your altcoins continue to draw to the downside and Bitcoin's continuing to draw up, when your altcoin actually bottoms, you could have more money to buy your altcoin if Bitcoin's up higher, right?
Yeah. And I'm glad you touched on that because I don't think a lot of people understand, a lot of, retail, even people on Twitter, they don't understand how, a foundation works. All these altcoins have a foundation behind them. How do they actually remain in business? And it's because they're selling tokens. Every time at the top, the Ethereum Foundation selling, the Solana Foundation selling. That's how they, they keep everything going. And a lot of people don't get that. And also with unlocks too. There's big VCs that have a bunch of unlocks coming in immediately with some of these tokens. When they pump, the VCs, people with unlocks are just selling immediately and batting the price down. And you don't even have a chance as, a retail investor and all that stuff. So yeah, I think Bitcoin's definitely very important. A lot of people, especially in a bull market, they kind of get, diverted away from it with all the altcoins and stuff, but it's still a great play. Like I would say, if your grandma or maybe you're like someone who's not too familiar with Bitcoin, they're asking, where to go, where to play, obviously not financial advice, but Bitcoin's probably the safest play in crypto, in, my opinion. It's, it has real liquidity. There's, real buyers on the other end. It's not some foundation selling tokens at the top to keep it running. And that's what really makes Bitcoin so great and all that stuff. So yeah, but now I want to get into the precious metals a little bit. We can talk about that a little bit with gold and silver and what's going on with that. Because I checked the gold chart, right before I did the show and everything, and I saw gold's been dumping a lot lately. What's been going on with the metals in that whole scene?
And I called this a while ago. I don't know why people just don't want to hear it. Yeah, gold at a triple top, man. Like, there's nothing more significant than a triple top or a triple bottom. And I don't know. Maybe it'll break out. I think if it goes back and retests the highs on gold, it'll probably break out. There is a lot of people that are, people that I continuously. Now I'm just kind of looking because I have another screen over here. I'm just kind of pulling it up. But a lot of people that that I think are good traders and stuff like that. They're kind of when it comes to the gold side of things, they're more on the bullish side. Oh, did I freeze?
Yeah, I think you froze a little bit. No, you're good now.
Okay.
You're good now.
All right, yeah.
Keep it up.
That was good. That was a good screen grab. But when it comes to the gold side of things, man, it's such a crazy play with gold. Would it be okay to screen share real quick?
Yeah, go ahead.
Okay. Let's see.
Do I have to let you? Is there? Hold up.
No, I got it.
All right. Okay. Cool.
We're good.
Let's go.
So this is kind of the triple top I was talking about. I think a lot of people are just not entertaining it. They're just kind of looking at gold specifically, and they're like, it's going to go up, it's going to break out. But you have a clear triple top, but you do have a validation zone right in here, right, which is what you're bouncing off currently. My expectations are you can see the trend line right here. As we come back down, probably revisit these lows if we break this area of liquidity right here. This is kind of like your major zone. So this is something I'm kind of watching right in here. It's like this right here. So that area of liquidity is very important. So as if you can hold that, gold could catch a bounce here, and then it'll just basically go into an uptrend more or less. So probably something like that. But if you don't catch a bounce here and you start breaking below here, I'd expect that you retest and then roll over to the trend, right? And then at that point, you can roll off and break out. So the triple tops are pretty significant, just like a triple bottom would be pretty significant. And you can see the triple top is the same liquidity zone over and over and over again. That's telling you, anytime you come up here, somebody's selling really big, right? So, you have to be careful with those because these are predatory moves telling you that price is going to come back to a previous liquidity zone. Again, this is that zone. Arguably, I'd say there's probably a 50 somewhere in there if you were to throw up a fib. So, from here to here, you're probably looking at playing right into the 50. Yeah, you actually broke the 50 here. So if you can recapture price above the 50, you can come back up. But if you don't recapture price at the 50, you're probably going to trade under into here, come back up, retest, and then roll back down. Now, where is that bottom? I don't know. It could be here, right? Be closer to 1550s. If it just falls straight out, could be here, closer to 1580s. And if it takes a long time to get here, it could be 1400s. We just have to. That's the hard part when it comes to charts. And now arguably, like if you were to look at this from minus the horizontal, right, the trend, because a trend move and a support are two different things. And that's what a lot of people don't understand. Like a trend move is your horizontals. Or sorry, not the trend move, but the trend move is your angles, and then your actual supports are typically your horizontals, right? So if I were to be a guessing guy, right, a guesser, I would assume that we're probably going to land somewhere in here, as you can see where I have drawn, and that's just to touch the previous liquidity zone again, and then roll out if we were to break below the trend. Now, just play the trend as it is. Again, I don't know the angle of this trend because it hasn't played yet. And there's not enough data here to play. But like if I were to guess, I'd probably say it's probably somewhere around here. And that's just to play off all the liquidity that exists here, right? So that would be kind of like your support. If you were to see a bounce here and come back above, boom, you're good for a long position there. And you'll probably break out of this, to be honest with you. If you come back up and retest these highs, I have no doubt you're going higher. Like absolutely zero. You're not going to 4-tap something and reject. It's just not going to happen. But a three-tap rejection tells you can come pretty deep, and that's why I'm entertaining the lower move before the upper move. But at the same time, we got to understand price, and price itself is kind of sitting here and doing this, lower, and then you could catch that bounce at a much lower position. So it's a tough spot. It's going to either be here or probably somewhere in here. But if you come down here, this is going to be a massive long for me. Like I don't expect price to break below this liquidity zone. If it did, it would be very bearish. And if you were to look at this from a high time frame, if you were to just kind of squeeze this all together, it's almost like you got a big M forming here. And so a lot of people will be bidding here, but the reality is that will probably never come, right? It'll probably be more something like this. If we were to trend to that lower zone, you can see I got a lot of confluence right here in this zone with this higher time frame. I got a lot of confluence if we break here that we're going to land somewhere in here, right? And that price is sitting around 1580. So if I were at like 1580 gold, I'd probably bid that. If you were to break that zone, that's not something you want to see because you're going to come down pretty hard if that happens.
Yeah, that would not be good. I don't think Peter Schiff would be too happy. He'd probably be yelling on Twitter.
But gold is a good indicator, though, man. Like a lot of people are looking at it and they're like, "Oh, it's super bearish." It's like, no, it just comes later. Just be patient with gold because if gold does any of these moves I'm talking, like you were talking price discovery, there is nothing more bullish than price discovery. So like you break out of these zones, like you can go exponentials, 3, 4K. Now I'm not necessarily in the camp of the people that are talking about like we're gonna go like 12,000 or some crazy number, but like, I think you can easily get up into these higher ranges probably because like you've got a lot of times that gold does these breakouts and a lot of people are just expecting this, right? And they're like, oh, it's going to do like, no. You have compound. A lot of people don't understand compound. What is compound? Compound means like the higher you go, the more liquidity that exists, the more money that takes to move the price.
Yeah.
And so you're going to start catching compression. You can see this move is much bigger than this move. And this move secularly will probably be 3/4 to 1/2 of this move, right? So like that's the way I would play this if I were to play gold specifically. So like let's just entertain this right here, go to here, and then we'll bring it up here, and we'll probably just drag it down a little bit. That's probably something like what your gold move would look like if it were to do anything. And you see that lands in like 3,700, 4,000. So if you're excited about a move that could maybe 2x you versus probably anything in crypto 5x plus, and I would say even Bitcoin arguably, then gold's your play.
Yeah. I think I think it's one of those long plays. It's also kind of a big doomer play. I see a lot of people on, Twitter and stuff. They're always talking about how, the big doomsday scenario where everyone flocks to gold and I kind of want to touch now on the broader economy and all that. Just a quick question. Do you think we could ever revert back to a gold standard? Do you think that's actually possible? Or
No.
I don't think so either.
I can tell you why. And that's just because when you convert to a currency or a rare metal or a rare anything as your standard, and this is why Bitcoin, I think that's a difficult sell to people to be the standard. Outside of the people making it the standard, right? That's the only way that would occur, which is hard to do when the majority of your capital in the U.S. belongs to the top 500 companies. But and that's why when people sit there and they're like, well, if we all join hands and all go into crypto, no, that's not how this works.
Yeah,
we don't own the majority of the liquidity. The companies own the majority, so they decide where liquidity will flow. But I would say, like, when you're looking at these things from what was the question?
Well, the original question was, do you think we could return back to a gold standard?
Yeah, so the gold standard, yeah, okay. Yeah. So what I was saying is, like, if it's stapled to something that's rare, something that is more difficult to manipulate, then I don't think that the governments would actually go for that. I don't think China would. This is why I don't think the BRICS things works. I don't think the U.S. would. I don't think any country would, because what's the best way to arbitrage / manipulate any currency? It's to hold the majority of it. And how do you hold the majority of it? You hold the ability to mint it. Yeah. Right? You hold the ability, and this is why USDT is so powerful in the crypto space, because they can mint and burn at will. Yeah. Right? And this is the same way the US leverages the dollar. This is the same way China leverages the yuan. And arguably, I would say probably the most honest country, I would say probably is Japan at all of these.
Yeah, and I think that whole Bitcoin hype, or Bitcoinization, whatever you want to call it, I think it's a load of shit. Just honestly, it's like, I think Bitcoin's biggest potential, I think it can eat at gold a little bit, it could eat maybe at the bond market, maybe real estate, but it's like, there is never going to be a day when everyone's just running around using Bitcoin. It's not going to happen. Maybe roll this clip in 40 years from now, I'm wrong, and I'd be very glad if I'm wrong, because that means I've definitely made a lot of money on it. But it's like, yeah, I don't know. You walk on the street, and I think everyone knows what Bitcoin is, but it's still very hard to use, and it's not scalable. You got to use the Lightning Network, which is pretty centralized, so it kind of defeats the purpose. So it's, scalability for Bitcoin's also kind of a big problem.
I would say that, but and this is something I brought up in a show the other day, because scalability is always an issue with any blockchain. Arguably, Ethereum's having scalability issues. We saw that in 2021. Yep. It couldn't keep up with transactions. And it had to go through, you were paying $500, $800 per transaction at some points. And that's just because of the scalability. And it would arguably even take 10, 15, 20 minutes to do a transaction, which is a really long time in crypto. And you had to come out with layer 2s to resolve that, right? But something I brought up is, what are these layer 2s? Well, they're separate entities that are built on top of Ethereum, and they can ultimately fail. And if they fail, then Ethereum's lost that scalability it's created through these layer 2s. I think we need a better solution when it comes to scalability, 100%. I don't think Ethereum is doing that for the space, although I think that a lot of people are levitating toward Ethereum. We're getting ETFs and everything else. And Ethereum as a blockchain, being on the blockchain, I would say arguably right now is your roads and bridges. But what are our roads and bridges? Are they wooden bridges with dirt roads? Or are they, metal steel bridges with, concrete roads forget what type of material is, but non-dirt roads. We'll just go that direction, right? I would arguably say they're dirt roads with wood bridges, and we need to come up with something better. Now, when I hear the word ETH killer, it automatically turns me off, because I think you're trying to achieve something by using something else to step up on it. I think if you come out as a project and you're scalable and you're usable and you're cheap, you are probably the best. I think that's why Solana caught the bid it did, is due to that. Now, again, even Solana saw what? They saw congestion issues. Now, congestion issues are what? They're also, again, comes back to scalability issues, right? So we got to find a way around that scalability issue in crypto. I think that's the biggest thing that we're missing here. And if we can get a way around that, it'll be really good.
Yeah, that's one of the interesting things about Ethereum that a lot of people who are not really into it don't understand. It's a pretty shitty blockchain when you actually use it. It costs a lot of money to do transactions and all that stuff. And their solution kind of for the scalability thing, there's kind of two scenarios where it's okay, we have these L2s like Arbitrum, Optimism, etc., all these ZK rollups, whatever. But then it's if Ethereum itself the base layer chain actually becomes scalable enough, will it make all those L2s obsolete and wash them out? Like, what's the play here? Is it going to be L2 reliant, or is it like eventually we're going to get to the point where the L2s die? What's the play?
And that's why when people are like bid L2s, it's like, I might for the next cycle, but I'm not bullish long term on L2s. I don't think they're a solution, and they can't stand on their own. Why can't they stand on their own? Because they're L2s. They exist because of Ethereum existed, right? And as long as the attention's on Ethereum, they'll catch attention, and that's what they're betting on, right? It's almost like the meme coin that is basically playing off the meme coin.
Literally though.
It's like, look, that's Pepe. We're Pepe's mom. I threw out a name.
Yeah, I mean, it's so true, because I just think about it. I'm like, I think L2s will do good next cycle, and I think it could be, who knows, at the end of the day, the market could decide that, it's just Ethereum's a shit chain and L2s go that way. But I think also there's that scenario, that they could be kind of the, I don't know, IBM or whatever you want to call it of, blockchain, where maybe the big L1 doesn't end up being Ethereum 20 years from now, because they do have a lot of problems, and what they have going for them is a lot of liquidity, a lot of users, a lot of liquidity, a lot of building, but it's like, besides that, the actual technology in itself is not that great, which is, something that can be debated and all that. But
I love how you brought up the IBM specifically, right? Because I was thinking about that. That's a really good analogy. And the reason I say it's a really good analogy, because a lot of people don't look at IBM and they don't look at it right now like, hey, these guys have fallen off.
Yeah.
Because they have fallen off, right? You've got AMD just destroying IBM as a whole, right? And you got a lot of these other places that are pretty much killing them as far as the company goes. So they were the innovation back in the day, right? They were the innovation. But sorry, I'm thinking AMD. I'm thinking Intel. My bad. So I would actually say it's more Intel, right? So if we were looking like things like Intel chips and so on and so forth, those right there have been outpaced significantly, I would say, by AMD chips, and that's because they got complacent, right? They got, and that's how a lot of these companies are. And that's what I think will be the downfall of Apple. I think if a company comes in and doesn't allow itself to be bought out and can actually innovate, rather than say the same consecutive iPhone with a tiny bit of difference in software to the camera year after year for a decade, then they'll be the new innovators, right?
Yeah.
And I think we're moving into that era. I think we're moving to the era of growth and innovation versus actual, like, say the same crap product for like 10 times the price just because we have it.
Yeah. And I also think, to backpack on that, to go back to the gold, there's a clip from, I don't know when, but the Winklevoss twins were sitting down with Dave Portnoy, and they were talking about how Elon Musk is eventually going to go up to space, mine the asteroids with all the gold, and all the gold's going to be raining plentiful, and gold's going to go to zero. Because, no, it's a real clip. Have you seen it?
No, I haven't seen that.
It's real. They're sitting down with Dave Portnoy, and he freaks out. He's like, wait, so you told me gold's going to be as plentiful as sand? They're like, yeah, Elon Musk is going to go up there and mine the asteroids, and it's going to... That was a good one. I was bumping that one on TikTok. People were getting heated. They're like, what? What are the Winklevoss twins saying?
Yeah, the Winklevoss twins, they know how to get the to get the clicks.
The Dave Portnoy crowd, they know how to get that crowd going for sure. Elon Musk going up into space and all that. And he bought it too. People in the comments believe in that and stuff. So yeah, but I want to touch now on the just the recent. I mean, I didn't really take too deep of a look into it, but I saw a lot of people on the timeline talking about the job report. Apparently, we gained 100 over expected amount of jobs, and there's a lot of people are saying the data is manipulated. They're kind of playing around with all that. So what do you think about the recent data that came out of the U.S. economy?
I'll tell you that I think it's real. I think that people are wrong. I don't think the data is manipulated at all. Maybe a little bit. There's a small correction of data issues, and I'll give you a reason. I'll give you reasoning behind it. I'm not just going to come out and say, hey, I think it's real. That's it. Too bad, cry. Like, I'm going to give you data. So the reason I think that it's real specifically is because I think in 2021, when you looked at a lot of active participants in the stock and crypto market, a lot of people did make it. And a lot of people took that equity that they made and they made businesses with it. They became entrepreneurs, they became influencers, they became a lot of things. And with that came what? Well, it came a lot of retirements at the same time too, because 2021 allowed a lot of people to actually retire early and not necessarily have to stay in the working market. And with that came what? Well, it came less service, right? It became less people actively working in the employee side of the market. And really, this is the intention of the Fed in reality, is to force people back into the market. Now, at what point does the party stop? Well, the party stops when active participants are fully capitulated back into the market, and all these zombie companies is what we'll call them, right? And it's something that Joe Carlos shares on Twitter. You guys should check him out. I'm just giving him a shout because he's a good guy, lawyer, knows his stuff when it comes to data. But it's something like that. He basically stated too, or at least he tokened zombie companies at that time. But I know of the term. These companies that are basically non-profitable, and I don't mean non-profitable in the way of charity. I mean like they haven't turned a profit, right? And they've created these shell companies that they thought would do something, that they created an idea and it's just not working. And so these companies will end up eventually getting washed out. And what will happen to those people that own those companies and work at those companies? Well, they'll be forced back into the general population employment market, right? Which means you're going to go to Google's, Facebook's, on it. You're going to work at the big companies. You're going to work at Walmart. You're going to work at Smith's or whatever, grocery stores, all that good stuff. And I think when they get actively pushed back into the market, that's what we're seeing. We're seeing these people having to come off of their savings, having to come off of whatever they have liquidity-wise, and just call it quits and get back into the market. So we're forcing a lot of employment back into the market, in a sense, through doing what the Fed's doing, through the tightening of the rates and so on and so forth. And eventually, when all these people are back in the market, what happens? Well, then eventually the data actually starts to turn sour. We start to get less employment, right? And then after you start to get less employment, what happens? Then that follows up with claims, right? And you're probably like, what are claims? Well, claims are on the side of, are people actually filing unemployment? If people are actually filing unemployment, what does that tell you from a data standpoint? From a data standpoint, that tells you that people are not hopeful that they can find another job. They don't think they can find one. That's why they're going on unemployment. Because if these participants were to just go directly from losing their business to unemployment, then that would be a different signal. But why can't they do that? Because they were entrepreneurs. What did they pay into the system for unemployment? Probably not much.
Yeah.
So they have to go back to working. And so they have to find a regular 401k, all that good stuff job. They're getting probably benefits, all that good stuff. So they're getting the regular company stuff. What does that do for markets? Well, when employment goes up, you get many different results of that, right? That also adds passive flows. And what are passive flows? It's 401ks, IRAs, passive investments. So that means that you're going to consistently see inflows of liquidity, not outflows, right? Because 401ks don't sell. What they do is they just allocate until you're 65, 70, probably 80 by the time I'm old enough to get it. They want to make sure you die before you get your money. But at the end of the day, these are different things that people don't look at from a data standpoint. So if you're getting a high adjustment on employment, it's actually more bullish than bearish. So I think the expectation was 170,000. We ended up with 330,000, right? Almost double the expected number. And a lot of people are like, so it's bearish because it's not doing what the Fed is trying to achieve. No, it's bullish. The Fed knows this is going to happen. That's the intention of what he's doing. The intention is to force these zombie companies to close their doors, force these people back into the general population of employment. And when I say general, I don't mean like, hey, you have to work at Walmart, you have to work at Google, or you have to work at Facebook. What I mean is like the job they were working before they made this BS company that they came up with, right?
Yeah.
So they're going to go back to their engineering job. They're going to go back to their Google tech job, their code writing job. Like they're forced back into what they were doing originally. And this rebalances basically the entire employment market. And once the employment market's balanced, now you got to start watching for red flags, right?
Yeah.
Because at that point, if the Fed continues to tighten into where you think that employment is balanced, you're going to start seeing a dropping of employment. Why? Because the market's become stagnant, right? Inflation probably picked up a little bit. Things are a little bit unaffordable. People are not willing to spend. And if people are not willing to spend, and they're usually not in these type of environments, that's why you're seeing a lack of spending, but an up on employment. But spending is still there. Spending is still there because people have to live, right?
Yeah.
But once spend starts to slow down and employment starts to veer to the downside and go below expectations, now a lot of people are going to get bullish and they're going to be like, oh, well, this is achieving what the Fed wants to do. No. You're on the other half of that thing now. Now it's actually going the other way. And now you're going to start seeing claims pick up. You're going to start seeing, and then people are going to start getting laid off because companies are going to start become not very hopeful that they can turn a profit, right? So they're going to start laying off people to offset what they see as potential downside. This is where the jobs market capitulates. And once the job market starts to capitulate, you're going to see less inflows because people are losing their jobs, no more 401ks, no more or less 401ks, less IRAs. That more selling pressure because people have to sell what they have. They probably sell their 401ks just to survive, right? And with their unemployment and so on and so forth. And now you've got a downturn market. But so many people think of this completely backwards. They think it's the other way. They think up jobs, negative because that's not what the Fed's trying to achieve. And they always think down jobs, oh, the Fed's getting what they're trying to achieve, so I should buy. No, you're buying into the capitulation when the Fed's actually achieving what they need to achieve. That's the downside.
Yeah. And I'd also like to, we can do a couple more questions here before we wrap it up, but I'd like to know your thoughts on kind of the overall thesis that we're going to see a sort of maybe a, big depression / recession in 2024 and, could, the government or the Fed or whatever, step in and inject a ton of liquidity to save the entire system? Do you think there's a possible doomsday scenario? Do you think they're going to step in and save it? I personally believe that there's not going to be a doomsday scenario because, these people want to keep their jobs. Biden going into the election, he's going to want the general population liking him. Exactly. If things go south, nobody's going to want to vote for him, and he'd have to be a complete idiot to let things south, if he wants to keep his job. So that's kind of my perspective. I'm just thinking about, okay, what are the people who kind of control and run the game? What are they trying to do to keep their own jobs? Because if things go bad for them, well, people are going to get them out of there. But I'd like to know your thoughts on that whole, what's going on in 2024, depression, recession, all that.
No, I completely agree. I mean, I think just like the whole stimulus, right? They stimulus to get him into office. So they're like, oh, we'll promise you guys all this money. Vote for me. And this is the same thing. Now, here's the thing. I think a lot of people are expecting a liquidity injection. I'm not. I'm not expecting a liquidity injection. I'm also not expecting some kind of doomsday scenario. I'm expecting a slow bleed in the economy, right? It doesn't mean liquidity has to bleed. It just means the economy starts to slowly bleed. How will the Fed achieve this? Well, they'll achieve it through doing what they said they were going to do. They'll go into probably 2024, right? And they'll probably, at some point after holding rates, maybe give an initial cut, right? Cut them down to like 4 or 4.5. Yeah. And then by end of the year, probably be closer to 4 or 3. Inflation's kind of veering down at that point. And then, moving to 2025, we'll probably be at hold. We're going to hold, by the way. I don't think rates come back to 0.
No.
Either. We'll probably hold in the 3-4 range. 2026 will probably hold them like the 3-2 range. And I think a lot of people forget 2019, but 2019 is exactly where that broke, right? So like right around 2019, we were actively moving into, lower and lower rates. And as we moved in lower and lower rates, things broke about the midway through the cuts, right? And that's where things actually snapped. And I think a lot of people are just expecting this snap to happen on initial cut. I do think there's probably a pullback into the cut, but I think it's a pullback for bidding, right? I think a lot of people are just wrong on the entire thing. Will there be tension in the market? 100%, because rates aren't at 0, right? And I don't think rates will go back to 0 anytime soon. I think we're probably looking at end of the decade. We'll probably be where we were in 2021, right? So probably 2 more cycles, and then we'll be like massive boom. But like for this cycle, we'll probably do a boom and bust like every previous cycle. And then I think we'll probably do something similar to what we did in 2021 around 2030. So I think like you just have to be able to see the writing on the wall at the end of the day and know where you're at. And I do. We can even entertain the whole soft landing thesis. I know some people hate that. They're like, I don't like that. That's not a thing. I agree. Look, I agree. It's a soft landing until it's not, right?
Mm-hmm.
So if you're coming down to the ground, you maybe lost the motor, your plane's kind of wobbling a little bit, and you're so close to the ground, right? That's that 2-3%, right? And then all of a sudden, your wheels won't come out, and now your plane just hits the ground on the belly, spins around, breaks in half. A lot of people die, and then some people survive. That's your soft landing, but it happens later. That's what a lot of people are not willing to accept. It doesn't happen now. Probably happens mid-election of whoever's the next president, to be honest with you. I would say, because here's the thing. If Biden were to get reelected, and I don't get into politics. I don't care what side, who, what. I don't think any government is in your favor. So if you're into politics, good luck with that. But specifically, I'm not an advocate for government. I think what they're doing is predatory. But
Amen.
I would say when it comes to Biden, let's say Biden wants to get reelected. It's his last term. Everything can crash and burn at that point, mid-election. Doesn't matter. It doesn't affect him whatsoever. He's achieved his 8 years. He's out. And that's what a lot of people don't understand. If he gets reelected, I think mid-election is probably where you'll see that crash and burn, right? And that will affect what happens mid-election. Well, it's the rotation of some congressmen and Supreme Courts and so on and so forth. Like, a lot of people don't look at how these things all kind of come together in these 2-year cycles, into these bigger 4-year cycles. So that's the way I look at it. I think it does come, the doom and gloom, just much later than what a lot of people are basically going to miss an entire market because they're waiting for the doom and gloom.
Yeah. Yeah, I completely agree with you. I don't think there's going to be a incredible, bull market. I think eventually, obviously it's going to happen again. It just takes time. But I also don't see the big doomsday scenario playing out. I think there's just a lot of people who are really hoping, a lot of people who miss the bottom, who want to see it happen. But I just don't, it makes just zero sense. It doesn't make any sense. But now I kind of want to, last thing I want to touch on is real estate. What do you think about the current real estate market? How do you feel about that? I really know absolutely nothing about it. So what do you think about what's going on with the mortgage rates and all that?
I always tell people it's more of a round than just some drop-off cliff, right? So like mortgages and housing, it comes to a peak and then it starts to veer down. And it doesn't just fall off a cliff. It literally has to circle around, right? It takes time for the housing market to really get crushed under these type of tightening cycles. So I always find it interesting when people are looking for like a 2008 scenario, because like the housing market was affected mostly by that because the housing market was a reason for that. If anybody feels the housing market is the reason for the next crash, I would love to hear it. But I don't see that as the reason for the next crash. I see the reason for the next crash as financial institutions, right? And that's just because of over leverage, of basically people over leveraging their credit lines, over leveraging, DGM plays, like credit on credit on credit type plays. And there's a lot of those out there right now. You've also got the refi market too, which for those in the audience, it's basically your free refinance market. I mean, that continues to get wrecked in these type of conditions. Why? Because a lot of people might be moving from 0.5% to like 5 or 6. And now at that point, that's adding extra pressure to, their demand side, because what does that mean? Well, that means if I'm a profitable company, somewhere in the 6% range, we'll say after overhead and everything else and paying myself, now I'm a profitable company somewhere closer to 2 to almost 0% range. I'm not making profits. And now that really wrecks my company, right? And these smaller to mid-cap companies get washed out. So, again, I think it's more of a financial institution issue right now, and that's what's being affected most by rates. I'll give you another example, and then I'll go back to the housing. Is basically, can banks compete for, we'll say, percentage, right? Percentage gain? No, because arguably banks have to sit at, above current rates. They have to offer above current rates to beat inflation, right? Because 5% rates is 5% on your total plus whatever you're already losing in inflation. And then you've also got, on top of that, banks that are trying to compete for that. So now banks have to offer 6, 7, 8% to be able to even compete with bonds. right? So if you can't compete with the bond market as a financial institution, you are destroyed. You're done. There ain't a bank out there that can compete with those kind of rates right now. I mean, there's probably some trying, right? But they're definitely heavily in the red if they're trying to. So that's why I think like these banks are going to be the ones that get hit the hardest. Again, this will come to fruition in the mortgage market because these banks will have to capitulate or basically contracts of loans that they put out and sell to other banks at probably discounted prices, and that other bank's probably going to predatorily change your contract if you're an adjustable, and then they're going to tell you, hey, I know you were paying 3%, it's adjustable. We bought the loan, you're going to pay 5%. We have to offset our risk profile due to having to buy your loan, and that's how they come in and they sweep out these people in the housing market. Now, the housing market itself, I would arguably say, is at a standstill. I don't think anybody out there with, I don't want to insult people. I almost went to the IQ level, but I don't think anybody out there with a little bit of intelligence is going out there and saying, hey, I want to go buy a car at 8%. I want to go buy a house at 8%, 7%, 6%.
Yeah.
Like, nobody out there is doing that. Now, I will say, nobody out there who's looking to get into a loan. If you have cash, you're probably shopping everywhere, right? Why? Because these rates drive prices down because they know they're going to make it on the back end of the loan. So prices will come down, loans will go up, or loan costs will go up, which will still average out more than the price of the house. But if you have cash, you come in and undercut people down.
Yeah.
Right. You cut them below cost of the house. People are losing money on their houses that they're selling. And eventually these people that have been sitting on the sidelines when it comes to the housing market, these people are going to be either forced into two scenarios. Once you start getting that employment sell-off, aka, companies basically getting rid of employees to offset costs, because the highest cost to any company is employees. That's their highest cost across the board. It's not material. It's not creation. It's not patents. It's employees. How do you offset losses? You fire people.
Yep.
So when they start to fire people have to do what? Well, they got to go back to their houses and they have to figure out how they're going to find a job. If they're not able to find a job, are they able to keep up with their mortgages? If they're not able to keep up with their mortgages, at that point they have to capitulate and sell at losses or get foreclosed on. And that could cause a foreclosure issue in the market, but it's nowhere near 2008 styles, right? I think the housing market comes down in the next 5-10 years. I really do. I think we're going to slow grind down for all markets, except for stocks and crypto. I think that those are nearly bottom. And I think that those probably go back all the time. And I would say historically, this is something I'd like to bring up with SPY. Let's just look at that real quick, because this all ties together, by the way. It's not me trying to flip-flop subjects. But we'll go to SPY, specifically SPX here. Historically, SPY has always tended to come back up to the high, exceed the high, or whatnot, any of these scenarios, and then revisit the lows, right? And that tells you that the market will end up crashing again. Over here, same thing. If we were to squeeze this together, look, just don't look at it as 2000 to 2008, but here's your 2000.com bubble drop. You revisited the high, 2008. You revisit the lows again. Arguably, where we're at now, and this is what I have drawn out up here, is this is your 2021 bubble, we'll say, right?
Yep.
Your drop. And then now, arguably, you move back up. You're slowly grinding. You're basically right here, right? You're right on support here.
Yeah.
You can drive to this green box, right? Because this green box is heavy accumulation. You're going to have heavy support there if you want to. I don't think they give this. I don't think the market gives this yet, right? So I think what's going to kind of occur here is that the market specifically has come down, rolled up, rolled back. And I think a lot of people are looking for this to be captured. It's not going to happen. And the market's going to roll back up to the highs, cross the highs. Then this happens later, right?
Yeah.
And this is where, I think bulls are wrong, bears are right. But for now, bulls are right. And this is your secular Bitcoin run up, right? I mean, look at the time frame here. I'm not trying to say this will happen in this time, but if we were to gauge this run up to this pullback to the next run up, arguably we might chop here for a little bit and then roll up over here, and are in the market for crypto probably in somewhere in 2025. and that'll be kind of your top, or close to end of 2024, somewhere in there, right? This is almost in this area where we're at with Bitcoin. It's almost like your 2019, right? That's where we're at. We're at 2019. Where was Bitcoin at 2019?
I think it was hanging around like 10K, somewhere around there.
Well, let's look at the chart real quick. So 2019, and I've drawn this out. This is not an indicator. It's something I've just kind of put together myself. But 2019, where was Bitcoin at 2019?
2019? Yeah. Oh, yeah, it was around 30K. I was thinking about the COVID. Yeah, I forgot. It had a little run up in 2020, then had that big pullback in COVID.
I think the bigger part I'm trying to put out here is it was at the bottom.
Yeah.
Right? And then after 2019, where were we? We came up, rolled over, and then took off. Look at what happened here. And now we're up. A lot of people are thinking, come back. This is a black swan. If you're betting on black swans, good luck to you.
Yeah.
So if I'm looking at this from this aspect, I think crypto can go up. I think stocks go back to revisit all-time high. I think the housing market runs up again. And I think all this rolls over together. Right around the same time. So probably roll sideways, maybe end up a little bit higher. Boom, halving, breakout, boom, secular bull market, bust. Right? And then at that point, we busted. Now everybody's like, oh, it's all over, yada, yada. Housing market probably gets destroyed here. 2025, right? The 2025 to 2026 is where I think the housing market gets destroyed. And then at that point, boom, we've hit a bottom. Market runs up again, 2028, whatever, 2027. And then we get our 2021 2.0 over here on the latter end, right? So what we're going to see right now is something more like this, right? And the reason it's going to work out more like this, the boom and bust phase, is because we're in an area, or we can call it a Goldilocks period, to where prices can accumulate and go up, but eventually they're going to bust. And everybody's going to think this time's different, wag me, yada, yada, and it's going to get destroyed again. And then everybody's going to lose hope. And I'm just going to continue to play these cycles until I'm gone. Because it's just too easy. It's just too easy. I can't make it any simpler for people. But again, the housing market plays a part in this. Because I think if crypto goes up, assets go up, housing market goes up, everything runs together secularly, and then bust, right? And I think this will be where the big housing crash will occur, is on the latter end rather than the front end, like a lot of people are thinking. I know that's not a hot take, or it can be a hot take for a lot of people. It may not be, the take that everybody wants to hear, but it's just what I'm saying.
Yeah, I mean, I think there's a lot of good stuff in there and everything, and I think there has to be a boom, there has to be a bust. Maybe Robert Kiyosaki is going to be right at some point. We're going to see that big black swan. He's going to tell us we told you so and everything. But yeah, that's basically. Is there anything else you'd want to touch on for the show and all that?
Yeah, I'm consistently getting people talking about that the 30-year can go higher, yada, yada, yada. So I want to explain the 30-year a little bit. So just the bonds market. I'll tell you flat out, bonds market's been wrong. All year, right? And everybody can sit there and they can take that as a hot take. That's just the reality of things. Bonds market bid. And what have we been doing up here? And you can see here, I had the channel drop, right? We broke out. We're trading sideways. We can go higher on the 30-year. 100% we can go higher on the 30-year. So if we think the 30-year can go higher, I can tell you we're going to see a massive run on assets if that happens. If the 30-year goes to some, this is not the 30-year. Sorry. That was NASDAQ. So NASDAQ, Dow Jones, all that good stuff like that. This right here is probably going to go higher. My bad. I meant to account for this chart. So you can see right here on the 30-year, like a lot of people are saying it can't go higher. At what point, where's the resistance? Arguably, your highest point of resistance is up here. I don't think we get there. Right? But would you not consider, let me angle this a little bit more to kind of touch all the candles. I always like to do like a full candle touch here. There we go. So what would you think if you were looking at this?
Number go up.
Just the way it's going.
Yeah, I mean, it's got the trend is upwards. That's what I'm thinking.
The trend is upwards. There you go. Yeah. And a lot of people are wanting to ignore that. Now, I will say there's some major resistance here on the 30, right? And it's closer to like, we've already broken above that here. I would arguably say we're probably going to get somewhere as close to there. So 5.35, 581, like that's almost a 6% 30-year. Yeah. Now, a lot of people say that's not achievable. It's not sustainable. Doesn't mean it can't happen. Does not mean it cannot happen. Mm-hmm. And like, regardless of again, this boom bust cycle, like I said, right? We can literally sit up here at the 30-year resistance and play this out until like 2026, 2027. And then the bust cycle, boom, bonds start to drop, right? That's where you start to get your buy-in. That's where you start to get your bid for bonds. So bond yields go up whenever people are selling. Mm-hmm. They go down whenever people are buying. Mm-hmm. And because they're going up, it's telling me people are selling their bonds. Why are people selling bonds? Well, I'd arguably say they're selling bonds and buying assets. And if you put two and two together, it just creates the perfect euphoric scenario for these markets. I mean, you can look right here. We've seen the same thing in the 2-year. We've seen the same thing in the 10-year. Like, they're all in this just like structural uptrend. Now, arguably, 10-year has broken trend. I'm not even going to try and adjust this. 100% is broken trend. But look at all the room you have before you come back up and retest trend, before you come down. Mm-hmm. Right? You have a lot of room to run this thing, and you have a lot of liquidity over here to grab. And I always look at it, I always say liquidity grab, even though this is not liquid, this is percentages. But I look at it like, where does price want to levitate? Where does the chart want to levitate? It wants to levitate to the next resistance before it comes back to the next support. So your next resistance is very obvious here, right? It's very obvious. It's very obvious. It's very obvious that this is your next zone where the 10-year wants to go. Mm-hmm. So that's where the 10-year wants to go. We're probably going again into the 5.3. So I think yields average out across the board between 5 and 6. And I think when you start getting a 5-6% yield, you need to start paying attention to markets even closer, because you're probably nearing the top. And I think by the time we get up here, we could consolidate this range for a while too, by the way, before we end up moving up to that consolidation, because this is now support. You can see right there, the clear consolidation range that was here is now support for price. So price sits here and ping pongs and consolidates here. Markets go up. They go up. It's just when your trend shifts and like say you're like somewhere's like here, that's probably your bottom. A lot of people haven't looked at this. So like look at 2000. Here, I'm going to give you the example, right? So here's 07. Here's 08. Right? Here's 08. Where were bonds prior to 08?
Up. They're over. I can't really see the chart that well. It's like 4.3.
Yeah. Well, no, they hit the 5.43 zone. They hit the exact zone I'm talking about here. Mm-hmm. Before the market busted, right? Now, when did you know to get out before 08? You knew once you violated this low right here. November of 07. November of 07, it was all over. Now, I'm going to give you a quick example of that. So I'll just do a dual chart here. And I'm going to give you SPY on this one, just to give you an example. By the way, call this top right here. I'm dead serious. I still have the post on it. Did I expect Luna to go to zero? No. But, hey, it was one hell of a short trade. So if we look at 08 over here, right, and we look at the overall market and so on and so forth, exactly where I said, right, the second you broke trend. So this area is not where you want to be. You end up back down here, you're looking for some pain. Look at where that was with the second you broke below there. Mm-hmm. So hold on over here. So same spot. You can see I'm on both screens. Boom. Look at where you were.
Yep, you can see the breakdown happening right there on both charts.
The second you saw bonds call downside, you exited all your positions. You just get out of them. And the second you saw bonds call downside over here, you had multiple months to really kind of get out of that. But here's the kicker. Where was your bottom? Your bottom was somewhere right in there.
Yep.
Now, how long did that drop last?
Yeah.
Arguably, looking at it, about a year. How long did 2022 last?
About a year. I'm like, wait, is this a trick question?
Look, how long did the dot-com bubble last?
About a year.
Again, 1 year, 1 year, 1 year. I mean, I can go back as far as people want. 1 year, right? Bear markets only last about a year. A lot of people don't even talk about that. They don't talk about it. They want to think this is some kind of consecutive year back-to-back bear market. No, it lasts about a year. And then if you look over here, 03, look, uptrend. 03, 04, 05, 06, 07, before the downtrend actually occurs. You see, like, I think people just have it so wrong over here. They're just so wrong. But I just want to throw it out there, just some food for thought. I think this is a really good correlation. Really good indication, too, arguably, right, that you need to start paying attention to the markets. Same thing here. Like, when you looked at SPY and bonds over here on the far side, where did you secularly break down? Up here, you broke down right here, right?
Yep.
But prior to that, where were you? You were up here. Mm-hmm. So you broke down in the lower liquidity zone, the lower area of interest rates. Are we in a lower area of interest rates or are we in a higher area of interest rates?
Higher area.
We're in a high area. So until we break back down into here, that's where you start watching. And once rates go back below 4, you're probably screwed. You're probably near top. I gave you guys some crazy alpha right there. Just
that was good stuff. That was really good. I'm glad you broke down all that stuff for us. Like, real talk. Definitely got to start looking at that 10-year bond for sure. 10-year yield on the government bond, all that stuff. I haven't been paying that much of attention to the bond market and all that. I just always hear about how bad bond market's been. Everyone's talking about how shitty it's been. Worst bond bear market ever, all that stuff, you know.
People keep crying about the bond market, man. They just like, but they don't look at it from a high time frame. They just want to like zoom in on like the 4 hour and like pick a spot and say, "Oh, this looks bearish." It's like, dude, like look at it from a higher time frame. It's in an uptrend. Yeah. You're moving up, regardless of whether you want to or not. It doesn't look. I'm at the end of the day, we can all say this isn't sustainable, but this isn't sustainable? Is that a reason for things not to continue?
Yeah.
Right. Like sustainability is just a metric. It's not a measurement of time. Right. Mm-hmm. A measurement of time is, hey, this could be sustainable for 2 years and then be unsustainable. This could be sustainable 3 years and then be unsustainable. Like people have to like broaden their minds when they think this is not sustainable.
Yeah, and I think that's kind of the same deal with what's going on like Japan. You know, it's like it's worked kind of for them, what they've been doing and all that stuff. But yeah, is there anything else you want to go touch on? Anything else you want to talk about?
No, I think it's a lot for today. It's probably going to be a lot for people to consume. This will definitely be a video to go back and look at, and I think in the coming couple of years. Yeah,
definitely, for sure. Of course, and all that. Is there anything, because we're about wrapping it up now. Oh, shoot, I'm starting to freeze. Hold up. Is there anything you want to show? Anything you want to tell social platforms? Where do people go? Where do people find you? All that stuff?
Oh, yeah, that'd be great. So I work with BB. So that's because Bitcoin. It's somebody I work with directly. I also work with Profits Over Wages. It's a cool person too to follow. Definitely, I would follow both. Scott Food, that's another one too. These are people that are consistently trying to educate and help people in the space. I do also love Blockchain Boy. Great guy. Great guy. And obviously Aaron here. That's why I'm here.
Yep.
Here chatting with him, talking, and definitely, give a like and follow on Aaron's video. If you liked what I had to give you as far as info and found it informative and helpful.
Yeah, everybody, I'm dropping daily videos basically every single day but Saturday. So every Saturday is going to be an interview, but I'm going to be dropping daily videos, just covering the news, cover what's going on. If you made it to this point, make sure you go follow us on go follow Will, go follow me. Make sure to subscribe, leave a comment, like the video, all that good stuff. But yeah, we're about wrapping it up. And yeah, thank you for watching.